Welcome back to Pulse on the Market. I apologize for the delay in episodes. I had to take a small break there, but we are back, and I will try my best to keep being consistent with the podcast, coming out with them daily. But this is Pulse on the Market. I'm your host, Jaden Vrains, founder of Vrains Capital, and it has been a wild month for the markets. I don't know if you guys remember, but in my last episode, I was talking about how the forward PE for the market, for the S&P, for the indexes was far too high, and that in order to correct this PE back to its typical average, it would need a 5 to 10% just a pullback. And we're seeing this currently, and it's currently in that range. We've seen it. It was around 7%, came back to 5%, but we are seeing it drop, and today is one of those days where it is just pushing the market down. So the Dow is down 1.7%, the Nasdaq is down 1.7%, and the S&P is down 1.4%. And we have the 10-year up 1.5% to 4.7%. This is the highest that the 10-year has been in over 5 months. And so, we see the indexes pull back, and we see inflation maintains, and we're seeing that these rates keep getting higher and higher. And the Fed is still cautious of whether or not they want to cut rates because inflation is still not under control. But something relating to that is that our GDP is slowing down, which is the goal of higher inflation. It slows down the economy and it brings down the interest rates. But I have my personal opinions on how to help out with inflation, not as much as only hiking rate cuts, right? But there are multiple things like a gig economy, which is where people utilize all their assets, create more jobs, stuff like this, that will automatically make this whole economy more competitive, drops the interest rates, stuff like this. Or it would lower the inflation, not interest rates, but technically it would. That would be a byproduct of it. But there are multiple ways to do this that I feel like we don't do as much of, and there are just other solutions to help with inflation. All right, but let's get into the story of the day is with Meta. So they had their earnings report yesterday after the close, and they are down 13%. They were down around 19%. They took a huge bath again. And Meta is king of just days where they're adding on 200 billion, taking off 200 billion. Very volatile when it comes to these earnings reports. It sways heavily in either direction. And the reason being, which I don't think deserves this big of a pullback. Fine with me. This could be an opportunity to enter into a position with Meta, and because of this huge pullback. But apparently, let me pull this up here. I don't remember where I saw it, but anyways, it was because Mark Zuckerberg was focused heavily on just his costly long-term AI and metaverse investments. So he was focusing more long-term, just doubling down on the investments, which would potentially have a huge reward later down the road, which I'm all for. I'm getting more into just the long-term investing, and I think Meta has the potential to reach very high numbers. And I think this is still the beginning of it, and of just their major growth. They have a lot of potential to achieve a lot more. People hate on Mark Zuckerberg, but he's phenomenal at what he does, and so he's ran the company awfully well, and like him or not, he's doing a great job at Meta. Let's see here. So that was mainly like the big thing that's been swaying the market in this direction, and we're seeing like Nvidia's up 2% and SMCI is up 1%, and there's certain stocks in the tech market that are doing well, right? In the Nasdaq, there's certain stocks, but overall everything's just been taking a bath because of this earnings report that kind of impulsed it. We had a couple of good days on Monday and Tuesday, or it was Tuesday, Wednesday, sorry. Or I think it was all 3 days were decent, right? But we had previous to that 6-7 days straight of just red, and it was not looking so bright. So April's been a rough month. Hopefully that May is able to recover a little bit, and we're able to bounce back. Hopefully the numbers for inflation come in better, the CPI reports, the PCE reports, whatever it be, that they come in better than expected, so we can see the market start to recover. But this is a given. We've seen over the last months that it's just been on a craze. It's just been in euphoria with with stocks, with AI, with, I mean, companies like SMCI, Nvidia, they've just been going off the charts. And so, I mean, it's the natural way that things go in the market where we see pullbacks such as these. So, I mean, if you can't withstand one of these, like, this is nothing in comparison to big recessions. But if you can't withstand one of these, then you should not be in the investing game. This is a part of it. All right, let's check out some news stories. Well, first of all, crypto, they just had their halving event. That's been long awaited, and as I said, we're not going to see a huge spike immediately after the halving event. People are going to think it's, oh, buy the rumor, sell the news, it's going to happen. Oh, what happened to the Bitcoin price? I thought it was going to go way up. But yeah, right now it's at 63,000, down 3% today. Let's check out how it's doing over the week. Down 1% over the week, 9% over the month. So, I mean, I am long-term in crypto, so I'm not planning on selling anytime soon. I mean, especially not till the end of the year. I think that it'll take a second for it to start to pick up, but once it gets momentum, I can see it topping 100K. But that is not financial advice. That's just a personal opinion. I'm not saying you should get into crypto. It is so risky. But for me, the reward is worth more than the risk. Yes, it's very risky, but I think it's even more worth it to me because of how much gains you can potentially have. All right, let's see here. Microsoft's down 5%. Yikes. They're coming out with an earnings report today, and it's earnings season, guys, and I love earnings season. It's so fun. And so let me give you a little rundown of companies that are reporting pretty soon here. So we had Meta. First of all, the companies that did report, Meta, they reported a revenue of $36 billion. So they beat their estimate by $295 million. We still saw the stock drop because of the guidance, right? And that's up 27% year over year, and their EPS was 4.71, which is up 114% year over year. So they beat that by 0.39 cents. And I love those numbers. I mean, that is solid growth, especially for a company like Meta in their stage of business. They're doing really well, and I like that a lot. IBM has released their quarterly earnings, so their revenue is up they reported a revenue of $14 billion. It's up 1.5% year over year, and they missed it by $88 million. And their EPS was 1.68, and that is up 23% year over year. So they beat that by 0.8 cents. And their stock ticker, their ticker is IBM. You could have guessed that. They're down 9% because of that missed earnings report. Let's see, ServiceNow. Their revenue was up 24% year over year, and their EPS was up 43% year over year. That's solid growth out of ServiceNow. I really like those numbers. Let's check how the stock is doing on the day. They're down 6%. It's difficult to come out with earnings reports, especially when you do well. If you have companies like Meta that report and then everything kind of falls, the market starts doing a downturn, and then it seems like earnings reports are a lot more sensitive. They need a far higher beats in order to sway the stock upwards in a down market. So it would take a lot. Let's see, Waste Management up 5% year over year on the revenue. I'm not a fan of that. I like the bigger numbers than that. Like Ford up 2%. Yeah, that's not looking so good. Let's see. That's pretty much it for the companies. There's a lot of smaller ones, but yeah, that's it. All right, let's see. Upcoming earnings, we got Microsoft. They're reporting today after the close. Analysts are estimating a 15% year-over-year increase in revenue and 15% year-over-year in EPS. Once again, for a company in that stage of life, of business life, they're doing pretty well. I mean, anything over 10%, both revenue and EPS in my book, is solid growth year-over-year. I like that, especially for a $2 trillion company. It's impressive. Or $3 trillion company. Google, yes, that is the $2 trillion company. And they're reporting today after the close as well. And analysts are estimating 12% year over year in revenue and $1.5 per share in EPS. And that is 29% year over year. So once again, solid numbers, especially for a $2 trillion company. And these are numbers that I'm required to see in order to invest in a company that they have consistent growth year after year. And they're projected to continue increasing their sales, increasing their revenue, or their net income, right? Their earnings per share. And yeah, we got Intel, ExxonMobil, T-Mobile, Amazon report Tuesday, and they're estimating $142 billion in revenue, which is up 12% year over year, and their earnings per share will be 0.83, and that's the estimate, right? And that's up 137% year over year, which is awesome. They're becoming more profitable, which I mean is phenomenal for investors. We like to see earnings. Eli Lilly will report Tuesday, so analysts are estimating 8.1 billion in revenue. That's up 16% year over year, and $2.29 per share, or in earnings per share, and that's up 41% year over year. So their revenue is increasing and their profitability is increasing, and I can see Eli Lilly just going up from here. And right now they're seeing a slight pullback from their all-time highs. So the stock is currently trading at 723, and we were seeing highs of around 800, and so we're finally starting to pull back. But back in, I mean, the start of the year, they were trading at 570, and now it's and it hit 800 down to 723 right now. But I think they have a lot of potential to continue to rise, and especially with their weight loss drugs like Mounjaro, the only thing they lack is supply, and they're building just factories, or just they're building factories to produce more of these weight loss drugs to keep up with the demand, because it is just so intense. There's a lot of overweight people in this world, and which is why this market is so huge. I mean, we've seen obesity rates climb dramatically, especially within the US, and this was intentionally used for originally, so the original intention for this drug was for diabetes, right? To help people with diabetes lose weight or whatnot, but now it's just severe obesity as well, where pretty much anyone can gain access to this drug, but not anyone because there's not enough supply, right? All right, Coca-Cola reports Tuesday. Not looking too good. They're going to be down 7% year over year and 6% year over year in earnings per share. So not very good numbers for Coke. I mean, yeah, they pay a dividend, but I will not be investing in a company that's not increasing year over year in the revenue and earnings per share. Personal opinion, there are different investing strategies out there, but I care more about appreciation than I do about dividend yield. It is far more important to me, because if I'm getting paid 6% dividend yield every year, but the stock is depreciating 8, 9, 10%, I'm losing money. I don't like that. AMD will also report Tuesday, and analysts are estimating $5 billion in revenue, 5.43, sorry, which is up 1.4% year over year, and $0.6 in earnings per share, which is flat year over year. So, which is kind of surprising, especially with the AI boom, that I expected their revenue and EPS to be quite higher. So, I mean, they're going to need a pretty excellent earnings report to drive that stock up, because especially with companies like AMD that have high PE ratios, that it is required for them to have solid earnings to justify this high valuation. And let's just check out the updated PE ratio for AMD. Yeah, so their PE ratio is 284 according to stock analysis, and their forward PE is 41.5. So I mean, yes, the earnings are dropping that down, but it's still quite high, and we're gonna need solid earnings in order to drive that slightly lower. And so I would say AMD right now is trading at quite the premium, and it's gonna need some solid earnings in order to justify this high multiple. All right, let's see here. I think that is good for today. I will make sure to keep you guys in the loop on anything else that's coming out, just to give you a little heads up on stuff that's happening in the Middle East, because this stuff is important. And that you guys saw that Iran launched 370 missiles at Israel, and we were ready apparently and shot them all down. Kind of a coincidence. All the people in Iran are celebrating. There could be a political agenda with that. I don't know if things will further into a worse war. I mean, there's a lot of underlying stuff that happens. And for example, there's a huge war that people don't really know about, and that's on the US dollar, which in another episode I'd be happy to dive deeper into. But anyways, the US dollar is the greatest product, as John S. Pennington once said. It is the greatest product ever, is the US dollar, that people will do anything for this product. And right now it's about 58% of the total supply of currency that's circulated throughout the world. And so it's a monopoly of currency. and people only do trade. If you go to South America, the companies there, or the countries there, don't care about just the other currencies within South America. It's not that valuable. But if you bring dollars in there, man, they'll start scrambling. So the dollar is amazing. And the US will often do deals with countries in order to circulate more dollars. Something that might seem absurd to us, like them giving Iran billions of dollars. I'll go into more detail later on. But stuff like that is a ploy. I mean, it's just a play in order to get the US dollar circulating more, which increases the value, or it maintains the value of the US dollar, which is the most important thing. Because if people stop using the US dollar, we would see a huge pullback, and it would not be a good look for us. So, but it's a really interesting topic, just the macroeconomics of the US dollar, and I would love to go into that deeper later on. But that is it for today. Once again, reach out to me at marketpulse.io if you guys are interested in learning more about this, or you have any questions, and I'll make sure to get back to you. And here's my little disclaimer. I haven't done this in a while, but this is not this is not financial advice. Please seek the advice of qualified professionals. I'm not responsible for any damages or losses based off the content of this podcast. You guys are your own agents. You make your own decisions. And I'm just here to help you guys try and make better financial decisions. But once again, I'm not liable for anything. It's all risky, and it could all go to zero. And these could be bad. This could be false information for all I know. But love you guys. Thanks for listening, and I will see you guys tomorrow.